It's not a stock we talk about very often, but then that's where the stories lie, don't they? Now, Whirlpool shares have been underperformers over the last few years. Now, in fact, if we take the last 5 years, 4 of them, including the start of this year, have all delivered negative returns for the stock. And that also comes on the back of sluggish financials. Now, Whirlpool's revenue growth is almost stagnant. Now, if we take a look at the last 5 years in terms of the revenue growth, from around 6,000 crores that it had in FY20, the FY23 revenue was also around 6,600 crores only. Now, the revenue growth is almost stagnant, and margins on the other hand are dwindling. Now, if we take a look at the margin picture, the EBITDA margins of FY19 of 12% are now down to 6% by the end of FY23. Now, moving forward, but despite this sluggish financial performance, the company continues to command a lofty premium. Now, we highlighted this yesterday as well, that the stock is trading at an FY25 price to earnings multiple of 43 times. Now, financials are on a shaky wicket, valuations are elevated, but what do mutual funds do? They buy more. Let's take a look at that graph. Now, in March of 2019, India's mutual funds had an 8% stake in Whirlpool, which remained around the same levels till the December of 2021. Now, since then, there has been a consistent increase in mutual fund ownership in Whirlpool, and as of December 2023, mutual funds own around 11.1% stake in the company. So, who is the ones holding the stake in Whirlpool? Now, as per the shareholding pattern, Kotak Emerging Equity Scheme had a 4.4% stake in the company, followed by funds like SBI, UTI and Aditya Birla Sun Life. Now, that 11.1% number is set to go further higher after yesterday's block deal, where 24% of promoter equity changed hands. They were the sellers there, and SBI Mutual Fund emerged as the top buyer in that transaction, picking up a 7.2% stake, and has now become the largest public shareholder of the company. Now, other buyers in that transaction included Aditya Birla, Society General, Nippon India and DSP, all of them picking up a half to 1% stake in that block deal. Now, the stock over a 5-year period is flat, and the same goes for the last 12 months as well. No movement at all. Now, in comparison, most of its peers barring Symphony have done well. Yet, on the valuation front, Whirlpool is expensive compared to most of them barring Havells. So, what lies ahead for Whirlpool? The company has laid out a plan to revive its sales growth through innovation, improved visibility, premiumization and other steps. The management has also given a long-term guidance of a high single-digit revenue CAGR and a high single-digit PBT margins. Now, Kotak Institutional Equities in a note earlier this month wrote that the street will have to assess the multiples at which the stock is trading. That's Whirlpool for you. The stock has been in snooze mode for a while now, but India's mutual funds are hoping that the machine will wash away all the underperformance sooner or later.